Hello everyone, welcome back to the channel for another weekly market update from Zylostar.
Geopolitical tensions eased as the US and Iran moved closer to peace framework, supporting global stock markets and pushing oil prices lower. The Federal Reserve kept rates unchanged, while SpaceX stayed in focus after its blockbuster IPO and ongoing share gains.
Indeed, that's what happened. Let's see how that's looking on charts. Alright everyone, here we are kicking off our market outlook upon the 5 major assets we analyze every week. Starting with Nasdaq. Exactly as I had highlighted in the previous week, $30,000 would have been our target. This is about exactly where market opened due to the pre-market open orders. I also had highlighted there's a very high possibility for the price to continue going to the upside because the optimism reflected from the SpaceX IPO. This is also what happened. We saw a continuation to almost all-time high, reaching that resistance before market fell down. Now we can notice actually multiple factors here. Speaking on the technical side, we have pretty good sized red candles and small green candles, which clearly tells us the accumulation upon the bullish side is slow. Now, many things to keep in mind. I had spoken about the market valuation of the SpaceX IPO to be $2 trillion and highlighted how low their revenues were when it was a private company. Now we are speaking about a market capitalization about $2.5 trillion, and that anticipated probable crash that I had spoken about in the previous week won't happen until we see the results of SpaceX, what delivery it can do to these investors when their earning reports are posted. So that's about Nasdaq and SpaceX. We can see at Nasdaq that technically we have Nasdaq is forming a symmetrical triangle on a fair value gap and also a mid resistance. And due to many technical factors, we can anticipate Nasdaq actually to be bearish for the upcoming week, retracing to this support. And overall, in the longer run, the same outlook I have been highlighting for you guys for, it's about 2 to 3 weeks, I think. So yeah, keep that in mind. Optimism drives assets for a very short period of time. However, intel that can be used practically is what makes market move impulsively, and so far we don't have it. Soon enough we shall. Now, looking at gold. Also, as I had spoken to you guys in previous week, our target was 4,330, and we can see clearly that market moved up to our target very, very smoothly. And here's something very interesting, guys. Interest rates were decided to be unchanged. Yeah, I think that's English grammatically right. Okay, this should be positive to gold, and it is. Why? Because Feds are in some good control of inflation. And as I had highlighted in the previous week also, that oil prices should fall and shorting it would have been a good idea. And this is exactly what happened. Well, we did mention in the intro that oil prices remained unchanged. Actually, it remained unchanged during the same week. But if you compare it to the last week, we have about $10 plus fall on price per barrel, which is massive, guys, considering a lot of factors here and there. So in short, both of these are good for the economy, and because the interest rates are unchanged, focus with me now. Yeah, I like to dive deep into details, you guys know that, but I'll try to brief it for you. So because the interest rates are unchanged, this should have been good signal for gold, aside that inflation should be reduced soon enough because of the lowering prices of oil and energy overall. However, we see this bearish movement not because of the interest rates, actually because the Bank of Japan and also the Central Bank of Europe both had increased interest rates to fight inflations in both regions, and that there was a very good signal why the Feds should raise interest rates. But according to what I had highlighted earlier in the previous week, interest rates should have not been changed, and they weren't. But why did gold prices fall, and why did Euro USD also fall and investors started buying the dollar? They did that because interest rates were not changed right, at the most recent interest rate decision. So investors are expecting highly, over 50%, that the interest rates will be increased by the end of July, when the new interest rate decisions to come out. Now, here's something very interesting to happen. If oil prices continue moving down, and especially that the peace talks between the United States and Iran now at their final stages, hopefully to come out soon, and we can also see that the prices actually fell because of that fundamental reason of these two parties coming to an agreement to let oil barrels go outside the Strait of Hormuz, even though it's still blocked. So it is being eased, which gives us a huge optimism for upcoming approach of peace, or hopefully final decision of peace to come out soon. So because of that, what happens is, if this peace finalizes, oil prices should go back even to lower prices, and that should not cause, or that, in better words, will cause the Feds not to increase interest rates in the end of July. All right? That happens, there will be no need for a hike on interest rates. That happens, gold spikes up. And if we look at volume, actually, in all these scandals and the rejections that we saw on this bearish engulfing, many technical factors, especially things that I dive in, for those who already have taken a course from me, you guys should understand what I'm talking about here. We can see that, yes, we have slight bearish retracement on gold. However, this is not to be the case, most likely, for a longer run. And matter of fact, a lot of other banks around the world, speaking about major banks, are stating that $5,000 is a very easy target for gold by the end of 2027. Now, if banks are anticipating that, of course, there's a huge research back to the back end of this assumption, or analysis rather say, because it's from bigger entities. Because of that, we can anticipate that by the end of July, there shall be no interest rate cuts. Yes, I hope you guys trust my analytics so far, because I believe I've been delivering very, very good results for you guys for a very long period of time, for those who are following us on the channel. So this is about gold. Going into Euro USD, yes, exactly as I anticipated, Euro USD for first target, it went for this resistance here at the trend line. Also, we can see here, that was our target. And I also highlighted that there's a very good possible continuation for a longer run for it to go to 1.7. And I still have that, but due to that sentimental behavior of investors anticipating a spike in interest rates by the end of July, we saw that demand on USD, which caused Euro USD to go down. All right. However, keep in mind that interest rates had increased on Euro USD. And actually, this move is not completely unpredicted, because if we go to deeper technical factors, we can see that this retracement was pretty much anticipated. And I always highlight to you guys, whatever you do, keep in mind risk management. Either ways, our target would have been a hit if you are trading according to what I'm sharing with you every week. And whatever I share, guys, is not a financial advice. All right, we always stick to rules. That's what makes us shrewd traders. Okay, so that's about Euro USD. We will shut down that. All right, going to Bitcoin. All right, Bitcoin is interesting, very interesting as always. So we can see Bitcoin forming for a somewhat of a bearish flag, right? And this is what caused technically these further downsides. Now, something very, very important to keep in mind is that money rotates, doesn't grow on trees, doesn't fall from the sky. Yes, the Feds printed here and there. Let's not talk too much about that part, but money rotates. So if we really want to be considerate about where the money is coming into AI, we need to understand the psychological patterns of those who invest in certain assets is, let's say, anticipated when you start understanding what those investors, institutions, whatever is participating to move the prices of that asset, mentalities and visions. We can see that there's a very, very good, let's say, listen to this, a very, very good parallel thinking between those who are investing in Bitcoin, anticipating the future of mankind and where it is going to go, and those who are investing in AI. And to be even more frank, practically, if we think about it, even like, of course, there are numbers to support this if we dive in a deeper research. However, what I'm trying to say is, one of the main reasons why Bitcoin prices are falling, and I had highlighted this earlier before, is that the money that is being taken away from the crypto market is being invested in AI, because both were looked at as, still being looked at as the future of mankind. Now, if we get that crash on AI, the one that I'm speaking about, the bubble that should pop up at some point sooner or later, investors will realize one thing. Even Elon Musk had clearly stated that AI is more dangerous than nuclear weapons. And in a lot of cases, people love visions that Elon Musk shares with the public, but also they are very, very likely to keep an eye away from his negative outlooks upon things. Like when he had spoken about Tesla shares, saying that I think the price of the stock is overvalued and I don't see why people are buying the shares. People keep buying the share because they like Elon Musk and his vision. Again, it's optimism, but optimism moves markets on a short period of time, sometimes very little. Practical intel is what moves markets very nicely, and eventually we saw Tesla shares actually having a long-term, let's not say long-term, for a trader it's a long-term, not for an investor, downtrend. All right, so keeping that in mind, if the AI bubble pops up, when it pops up, we will see all that optimism that were in AI going back into crypto, and all that takes, guys, is one policy monetary, one vision from someone of influence. And even to support that claim, we will see that crypto had already delivered in the past. Bitcoin reached to about 120 something thousand, right? I don't really remember dates and numbers good. Everybody should know their points of strength and weaknesses. That's what makes us actually better human. So, and that is very, very interesting to keep in mind, because if that bubble pops up, we will see that money flows into crypto again. All right, that's about Bitcoin. I still believe that Bitcoin is a very, very good investment for a long term, speaking about anticipation till 2030. Maybe before, because frankly speaking, markets have been very, very impulsively more in the past 2.5 years to 3 years compared to the whole history of mankind prior to that. Now, speaking of Nifty 50, exactly as I had highlighted to you guys, market went up. You could have went for a long position. From here, we see actually a small bearish pattern of a rising wedge, which might cause this asset to move a little bit back for retracement to the support before a continuation to the upside, or it could continue actually to the upside directly from here, targeting this resistance. So now, most probable scenario is it's bullish on both sides. It's just that about where is your entry going to be, and that's something we can finalize if we're looking for a precise entry when market open. Otherwise, you can take your entry considering risk management to be floating or having a space for it to flow as in a drawdown for that possible retracement to happen to the downside. This is about my market outlook for the upcoming week and period of time and years to come. Hope you guys got some good intel. And now I'm going to shift the microphone to Mr. Median from London to share with us some good insights from his end. Mr. Median, it's always pleasing to hear from you.
Brilliant. Thank you, Sarah, for sharing your amazing analysis. Here is Amir Hamidian, financial market analyst at Zylostar in England. Last week, we got the latest updates regarding the different central banks about the interest rate decisions and also their monetary statements. Let's have a look. Greeting everyone, welcome back to another weekly market update hosted by Zylostar. Last week, finally, after 2 months of clashes, we are gonna expect the tensions to be de-escalated as Iran and the US signed a final ceasefire. So we are going to expect the volatility in the upcoming days and months to be less compared to the last 2 months. I want to kick this session with the last week economic indicators, precisely from the UK, England. In the England, based on the latest number released by the Office for National Statistics, in the UK, inflation held at 2.8% in May, unchanged from the April. Prices rose by 0.2% on month, with pricier transport offset by cheaper food and drinks. The bigger story is underneath. Good inflation is cooling to 2%, but services inflation jumped to 3.7%. A sign cost pressures are shifting, not disappearing. Transport applied to the most upward pressure, while food and non-alcoholic beverages made the largest downward contribution, as you can see here in this graph. This graph, worth mentioning, is provided by the Office for National Statistics in England. The next is about the interest rate decision by the MPC from the Bank of England, or let's say central bank. Last week, the Bank of England's MPC held the bank rate at 3.75% on 17th of June, voting 7-2, with the minority pushing for a hike to 4%. The decision reflects failing but still volatile global energy prices following the Middle East tensions and situation, alongside a continued losing labor market in the country. Next decision is going to be on 30th of July, which means the next meeting of the MPC. Before going to the Bank of Japan, I want to talk about the Federal Reserve, as we received the most important report by the Federal Reserve, which named Dot Plot. Last week, we received the economic projection by the Federal Reserve and FOMC members. And based on the latest updates, as you can see here, now compared to the March projection, they are expecting a lower growth rate by the GDP, higher inflation from the PCE and also the core one, and eventually the federal fund rate they are expecting to be higher compared to the March projection. And as you can see here again, they are expecting a higher rates. And financial markets now expecting a stronger dollar, as the Fed is not gonna drop the interest rate due to the conflicts, due to the Brent crude oil price, and so on. For 2026, which means the upcoming months, the Federal Reserve participants, the FOMC members, are expecting the rate to be at 3.8%, which means the March projection was 3.4%. And also for 2027, they are expecting the rates to be at 3.6% compared to the 3.1% for March. And also the same scenario is happening for 2028, which is 3.4% compared to 3.1% on the March projection. All together put a huge upward pressure to the DXY, which means United States dollar compared to the other currencies. Now let's jump to the Bank of Japan in Asia. In Japan, the central bank hiked the rates by 25 basis points to 1% by the voting of 7-1, as wage growth, above target inflation, and still negative real rates met the bar for continued normalization. In Australia, central bank RBA held the cash rate at 4.35% on 16th of June, pausing after several hikes earlier this year amid the uncertainty at the Persian Gulf. From the geopolitics, as mentioned earlier, finally after 2 months, we got the final ceasefire between Iran and the US. We are expecting the clashes are going to be de-accelerated at the region, and also the reopening of the Strait of Hormuz without getting any fee by Iran is accepted in the upcoming days, which is 60 days. Despite the deal, Israel airstrikes have continued to target towns in southern Lebanon, even as violence has reduced overall since the Iran-US agreement was announced. Now let's jump to the next week and let's review the upcoming days for the financial markets. For the next week, the most important economic indicators are going to be the CPI for Australia and Canada, plus the GDP for the United States. Worth mentioning, some important companies such as FedEx, Trip.com, and Carnival in the US are going to release their corporate earnings for the last quarter. Stay tuned with Zylostar. See you next week.